Hello and welcome to the block revision session for the financial accounting paper. Today we are going to answer question number 4 that was tested in December 2023. And this question tested candidates' knowledge on the preparation of financial statements of a not-for-profit making organization. The question reads as follows. The following balances were extracted from the books of Sagana Golf Club as at 1st September 2022. So we've been given the balances for assets, balances for liabilities, and also the capital. Then below, these are balances as at 1st September 2022. Then below these balances, we have an analysis of the bank account operated by the club, which showed the receipts and payments during the year. So we have receipts and payments. Now below the receipts and payments, additional information number 1, the club maintains a building fund separate from the accumulated fund and life membership fund. The building fund is invested in ordinary shares and also deposited into Jamii Building Society. Number 2, Jamii Building Society has been instructed to credit the interest on the club's deposits to the club's account at each half year. Jamii Building Society computes interest half yearly on 28th February and 31st August. For the year ended 31st August 2023, the interest amounted to 840,000 shillings. Dividends paid on ordinary shares are also added to the building fund by paying them into the building society account. 3. There were 5 life members as at 1st September 2022, one of whom died before the end of the year. 2 other life members joined the club during the year. Life membership fee is $1 million per member. When a life member dies, his contribution is transferred to the accumulated fund. 4. General clubhouse expenses included bar wages of 4.2 million. 5. Balances as of 31st December 2023 were as follows. We have creditors for bar supplies, subscriptions in advance, subscriptions in arrears. Then we have balance for bar debtors. Number 6. As at 31st August 2023, bar inventory was valued at 4,350,000. Then number 7, an insurance premium of 480,000 was also included in the general clubhouse expenses that had been paid by check. The insurance premium was for the year ended 30th November 2023. That is a prepayment. Required: A. Bar statement of profit or loss for the year ended 31st August 2023. B. Statement of income and expenditure for the year ended 31st August 2023. C. Statement of financial position as at 31st August 2023. So that is the question. Now, candidates, the information provided, first of all, we are given the balances of assets and liabilities at the beginning of the accounting period. That is the first information. The following balances were extracted from the books as at 1st September 2022. 1st September 2022 is the beginning of this accounting period, and this period ends at 31st August 2023. It's important to pay attention to the dates. That is the first set of information provided in this question. Another set of information is an analysis of the bank account operated by the club, which shows the receipts and payments. You can see down there, we have receipts, then payments. Then lastly, we have another set of information which is known as additional information from number 1 to number 7 as I read it. Then we are required to prepare bar statement of profit or loss for the year ended 31st August 2023. So candidates, here is a club known as, the club is known as Sagana Golf Club. This club operates a bar, which is a form of raising money to finance the activities of the club. So we need to first of all calculate the profit or loss of this bar at the end of the accounting period. That is the requirement. Bar statement. So let's begin. Sagana Golf Club, bar statement of profit or loss for the year ended 31st August 2023. We begin with the bar sales. Bar sales. We want to find out if there was any profit or loss that was either generated or incurred in relation to the bar business. So, do we have the bar sales? Yes, in the bank account, the receipt side, you can see there we have bar sales of 28,600,000. Now, to determine the correct amount of the bar sales, you need to have a working, which we call debtors. On this debtors, we'll debit any balance at the beginning, okay, to determine the amount here of sales. We will debit whatever balance that was there at the beginning and any balance at the end. Then we have, do we have any balance at the beginning? Balance at the beginning, to determine or find out the balance at the beginning, we look at the balances as at the start of the accounting period, and there is no amount for, there are no balances on debtors. There was no data in the books at the beginning of the accounting period. We check if there is any balance at the end of the accounting period. Look at note number 5. Balances as of 31st August 2023. There is bar debtors. That is a balance at the end. So the bar debtors balance at the end is 650. 650. That is balance at the end. There is no balance at the beginning. Then from the receipt and payment, you can see that debtors were paid. Look at the payment side. Payment side, we have debtors. No, there were no payments, but there are receipts. On the receipt side, we have bar sales. That is the amount that was received. The bar sales. So you can see the receipts or the bank account is debited, and the bar and the debtors account should be, this is payment and receipts or bank. The amount there is 28,600. 28,600. 28,600. Right? 28,600. We check if there is any other information in relation to the bar sales. Yeah, that's it. So any balancing figure here will represent the bar sales. The balancing figure here is the bar sales. The balancing figure. So this will be equal to 29,250. The bar sales. 29,250. 29,250. That is bar sales. Cost of sales. How do you calculate cost of sales? You take the opening stock, add purchases, less closing stock. opening stock. From the balances at the beginning, opening stock is how much we have buy inventory. Yes, buy inventory 4850. 4850. Add purchases. Just like in sales, we need a working for the purchases, and to determine the amount for purchases, we need to prepare creditors account. If there was any balance at the beginning, we credit it, balance brought down. If there's any balance at the end, we debit here, balance carried down. If there is any payment, we debit the payment. Then if there is any balance, that will represent purchases. That is how to calculate purchases. The balancing amount here will be our purchases. The opposite of the debtors or sales. You see sales appears on this side, sales appears on this side. So creditors accounts always have a credit balance. So we have a balance there. Let's check from the opening balances. Do we have creditors for bar supplies? Yes, balance at the beginning 350. How about balance at the end? Do we have any balance creditors at the end? Yes, creditors, note number 5, balances as of 31st December 2023, we have it there 1600 at the end, 1600. Then from the bank records, do we have payments to creditors? Payments to creditors, payments to creditors. That is on the payment side. We have utilities, bar supplies. Yes, bar supplies 23,500. 23,500. The balance there will represent purchases. We get the total, then the balancing figure will be our purchases. The balancing figure will be our purchases. 24,750. 24,750 is the purchases. 24,750. Then we deduct the closing stock. Closing stock, where do you get the closing stock? From the balances. Note number 6, as of 31st August 2023, bar inventory was valued at 4350. 4350. Deduct. That will be the cost of sales. Cost of sales. So we have 25 here, 25,250. Cost of sales deducted from sales, that will be 4,000 is a gross profit. Then we deduct the expenses. These are bar expenses. Bar expenses. Do you have bar expenses? Where do you get expenses? Expenses are always paid through the bank. Do we have any expenses in relation to the bank? We have maintenance of golf, then there is clubhouse, utilities, purchases, repainting. There is no expense from the bank records. How about additional information? Additional information number 4, we read that clubhouse expenses included bar wages, 4.2 million. Bar wages. We have bar wages, 4.2 million. We check for any other expense. Note number 7, an insurance premium 480 was also included in the general club expense that had been paid. So from this record, there is no any other expense. So we get the total, 4,200. And clearly this is a loss. This is a bar loss. The bar did not make profit. There was a loss in bracket, that is a loss. So we have answered part A. Then part B reads, statement of income and expenditure for the year ended 31st August 2023. Sagana Golf Club statement of income and expenditure for the year ended August 2023. This is the equivalent of profit and loss account for the businesses that make profit. This is a non-profit making organization. Instead of preparing a statement of financial performance, this one prepares an income and expenditure account. So we're going to begin by documenting the incomes. What are the incomes of this club? Look at the receipts. That's where you find incomes. The first item there is subscriptions. Those are subscriptions that were paid during this year. But we also have additional information in relation to subscriptions. Note number 5, we have subscriptions in advance. We also have subscriptions in arrears. So we're going to prepare a subscriptions account. This is an income account. So in note number 5, those are arrears at the end of the accounting period because there is a date August 2023. But from the balances at the beginning, do we have any balances in relation to subscriptions? Yes. Below life membership fund down there, we have subscriptions in arrears. These are subscriptions in arrears at the beginning. These are subscriptions in arrears at the beginning. So subscriptions in arrears or subscriptions due at the beginning, do we debit this account or do we credit? We debit. This is balance brought down. The amount here is 600. Before that, you also have subscriptions received in advance. Just below deposit with the Jamii Building Society, the other item down there is subscriptions received in advance. That is subscription received in advance at the beginning. So subscription received in advance at the beginning, do we debit this account or do we credit? Here we credit. Balance brought down 400. That is, these are balances at the beginning. Then we have balances at the end. Balances at the end of the accounting period in note number 5. We have subscriptions in advance. Subscriptions in advance at the end of the accounting period. Subscriptions in advance, we debit. Balance carried down. The amount is 900. Followed by subscriptions in arrears. Subscriptions in arrears, we credit. We have here balance carried down 300. So there are balances at the beginning and also balances at the end. Then there is also the payment that was made through the bank, the money that was received in relation to subscriptions. So when subscriptions are received from members, the bank account is debited and the subscriptions account credited. So we credit that account 26 million. So the balancing figure here will represent the subscriptions for the year, which we are going to credit in the income and expenditure account. Income and expenditure account, the balancing amount. So we have 26,700 minus 600 minus 900 is 25,200, 26,700. So 25,200 is subscriptions for this accounting period. 25,200. 25,200. That is the first income for Sagana Golf Club. The second income is in note number 2, which reads, Jamii Building Society has been instructed to credit the interest on the club's deposits to the club's account at each half year. Jamii Building Society computes interest half yearly on 28th February and 31st August. For the year ended 31st August 2023, the interest amounted to 840. So this is interest from Jamii Building. Interest from Jamii Building Society. Interest from Jamii Building Society. The interest is given at 840. Do you see that? That is as at this date, which is half yearly. The interest is 840,000, and that is half. And we recall we are computing the statement of income and expenditure for 12 months. So if this is half, then for the 12 months will be times 2, which is equal to 1680. So that is interest from Jamii Building Society. Another income is tournament fees. Tournament fees of 1 million. Tournament fees of 1 million. Then under receipts there we have dividends from ordinary shares. Dividends from ordinary shares of 800. Dividends from ordinary shares. So these are the incomes. If the bar had made any profit, we would add here. But since the bar made losses, then we are going to include the losses under expenses, expenditure. And the first one is bar loss. This bar loss of 200. That's the first expense. Then under payments we have maintenance of golf course, maintenance of golf course, maintenance of golf course 17,150, followed by general clubhouse expenses, clubhouse expenses. Now, do we have any adjustment? Yeah, note number 4, we read that general clubhouse expenses included bar wages. So we are going to have a working here for clubhouse expenses. The amount paid from the bank, we have 12,150. We need to deduct 4.2. General clubhouse expenses included bar wages. Which means we need to remove the bar wages from this amount, 4,200. Then I think there is also another adjustment. Note number 7 reads, an insurance premium of 480,000 was included in the general clubhouse expenses that had been paid by check. So we also deduct the 480. So the general clubhouse expenses included these 4.2 and 480. So the difference will be the right amount to debit in the income and expenditure account. So we have This is equal to 7470. 7470. That is the clubhouse. Then we have utilities. Utilities 1528. Utilities 1528. We check for any other expense. The last one there, repainting of clubhouse. Repainting of clubhouse. The amount is 1260. Repainting of clubhouse. Now we check for any other expense which could be under the additional information. Which do we have any other expense? How about the balances at the beginning? Do we have? No, we do not have. So these are the expenses total. For the total expenditure, 27,608. Total incomes, 28,680. Deducted from that, what is their surplus? 1072 is positive, and therefore this is a surplus. It is a surplus of 1,072,000. So this is B. We move on to C. What is the requirement? Statement of financial position. We have non-current assets. Non-current assets, these assets are not depreciated, so we are not going to have a column for accumulated depreciation. We only record the assets here. We'll have two columns. For the first non-current asset, from the opening balances, we can see there we have golf course at cost. Golf course. This one is not depreciated. The amount is 80 million. Then we have clubhouse at cost. Clubhouse. We need to check if there is any other transaction in relation to these assets. Clubhouse. We only have expenses. Yeah, in payments from the statements from the bank, we have purchase of clubhouse equipment. Purchase of clubhouse equipment. So the clubhouse, the cost of clubhouse, do we have any additional information on clubhouse? No, we only have expenses. Purchase of clubhouse equipment and also general clubhouse expenses. So the clubhouse cost is 20 million. Then we have clubhouse equipment. Clubhouse equipment in the opening balances. Clubhouse equipment. Now this clubhouse equipment, the balance at the beginning is 3.4 million. Then a note from the bank records, under payment side, we have purchase of clubhouse 700. We're going to add 700 to what was there at the beginning to give us the total of 4100. That is clubhouse equipment. Then we go back to the opening balances. We check if there is any other asset. Any other asset. Investments representing the firm. Yes, we have investments. The third item is investments representing the building fund. We have ordinary shares and deposit with Jamii Building Society, which gives us a total of 19.4 million. 19.4 million. These are investments. So candidates, you can see the investments are shown at the beginning at 19.4 million. But if you check the payments, receipt and payment, the receipt and payment, you can see that there is a deposit into Jamii Building Society. There is 800,000 that was deposited into these investments. So we are going to add 800 to these investments. That will give us 19.4 plus 800. This is equal to 20,200,000. 20,200,000. So these are the non-current assets. So we are going to get the total of the non-current assets. That is 124,300. Then we have the current assets. We add the current assets. Current assets. From this question, we first check the balances provided at the beginning and see what items comprise the current assets. We have cash in hand, bank, there is a bar inventory. So those are balances at the beginning. So we check for bar inventory. The under note number 6, you have as at 31st August 2023, the bar inventory was valued at 4350. Bar inventory is the first non-current asset. Bar inventory 4350. Then we have bar debtors. These are debtors at the end of the accounting period, 650. Bar debtors 650. Then under the same note, we have subscriptions in advance. That is a liability. Then subscriptions in arrears. This is amount that the members ought to have paid, but they've not paid. So this is an current asset. Subscriptions in arrears. Subscriptions due. Subscriptions due at the end of the accounting period, 300. Subscriptions due. Another current asset we read in note number 7, the insurance prepaid. Prepaid insurance. The club paid insurance in advance. That is a current asset. In note number 7, an insurance premium of 480 was also included in the general clubhouse expenses that had been paid by check. The insurance premium was for the year ended, that is for the next accounting period. So this 480 is a current liability. Then we have lastly the bank. Now this bank will need working. The bank account will need a working. This has not been provided directly in the question, but we know that at the beginning of the accounting period, there was a balance brought down of 950. The balance at the beginning of this accounting period in the bank is 950. Then we are going to debit the receipts, all the money that was received in the bank, and that is shown in the second set of information, we have receipts, subscriptions, 26 million, life membership fees, 2 million, tournament fees, 1 million, bar sales, 28.6 million, and dividends from ordinary shares, 800,000. So we are going to get the total of these receipts. This is equal to 58,400. 58,400. These are receipts. Then we also have payments. We total the payments plus that plus 800 plus 1250. This is 57,008. 57,088. These are the payments. So at the beginning, there was a balance of 950, then 58,400 was received, 57 million and 88,000 was paid. Then there was also another receipt under note number 2, the interest. Dividend paid, the interest there, candidates, the interest should be 1680. Interest 1680. This is interest that was received, 1680. So the balance on this figure will represent what was in the bank at the end of this accounting period. So let's do the addition. 61,030 minus 57,088 is 39,42. So the bank balance is 3,942,000. That is the bank balance. It required a working. The cash balance does not need a working because under additional information, there is no information in relation to cash. So what the balance that is indicated at the beginning is presumed to be what was there at the end, 100,000. So these are current assets. Total, we want to add this total, 98,22. Get the total assets. Total assets, 134,122. These are total assets. These total assets are financed by one, the accumulated fund, financed by the accumulated fund. Now let's look at the accumulated fund at the beginning of the accounting period. Do we have the accumulated fund? No, we don't have accumulated fund at the beginning of the period. That accumulated fund requires a working. The question does not give us the accumulated fund at the beginning of the accounting period, but we have information that can help us determine the accumulated fund. Accumulated fund. How do you calculate the accumulated fund? We are going to have list of the assets. We deduct liabilities. The difference will be the accumulated fund. Now from the balances at the beginning, we have golf club, 80 million. Clubhouse, 20 million. Investments 19.4 million. These are thousands. After investments, we have subscriptions received in advance, that is a liability. Creditors for bus supplies, that's a liability. Life membership fund, that is a liability. It appears on the liability side. Subscriptions in arrears, subscriptions due 600, that is a current asset. Buy inventory 4850, that's an asset. Clubhouse equipment is an asset, 3.4 million. Cash 100 million. Bank 950. Then we have the life membership fee of 1 million. So we are going to get the total of these assets. We get the total. This is total assets. We aggregate. The total here is 130 300. Then we deduct the liabilities. Now, from the information provided, do we have liabilities? Yes, we have subscriptions in advance. Subscriptions due at the beginning is 400. We deduct from that. Then we have creditors. Do we have creditors at the beginning? Creditors at the beginning? Yes, creditors for bus supplies. Creditors for bus supplies amounted to 350. We deduct from that. Then we have also life membership fund. Life membership fund of 5 million. We deduct from that. We have 124,550. This is the accumulated fund at the beginning of this accounting period, and this is a fund that should appear in the statement of financial position at the end. The accumulated fund is 124,550. 124,550. We add the surplus. This surplus 1072. Then we have the liabilities. Liabilities at the end of the accounting period in note number. We had liabilities in note number 5. Candidates, note number 5. Liabilities, creditors for bus supplies. Creditors for bus supplies 1600. Then we have subscriptions in advance. Subscriptions. Now, subscriptions due in note number 5. Subscriptions, that is subscriptions prepaid, should be prepaid subscriptions. Prepaid subscriptions. is liability. Prepaid subscriptions is 900. This is 900. This one I can push here, 1600. Then we have life membership fund. Now, life membership fund candidates, in note number 3, we read that there were 5 members as at 1st September 2022. That is at the beginning of this accounting period, one of whom died before the end of the year. 2 other life members joined the club during the year. Life membership fee is 1 million per year. So at the beginning, there were 5 members. Then we read that 1 died, so minus 1 died. Then we also read that 2 other life members joined. 2 other life members joined. So 5 minus 1 plus 2 is equal to 6. And we also read that each member contributed 1 million. So 6 times 1 million will give us 6 million. So the life membership fund here is 6 million. So these are the liabilities. So we can add and counter check if the total accumulated fund and liabilities will equal the total assets. Let's begin with this amount. It's 125,622. Then we have 1600 plus 900 plus 6 million. It's 8.5 million plus 125,622. It's 134,122. So these two must be in agreement. So that is the statement of financial position as at August 31st, 2023. The club is known as Sagana Golf Club. We've prepared the bar statement of profit for this club. So this is these are the items, and that is the loss. The bar made a loss of 200,000. The second requirement was for you to prepare the statement of income and expenditure, which we have done. We began by listing the incomes, beginning with the subscriptions, which had a working interest on from Jamii Building Society. We have tournament fees. There is dividends from ordinary shares. These are incomes. Then we deducted expenses, beginning with the bar loan, maintenance, club expenses, utilities, repairs of the club. These are the total expenses, and that is the surplus. When the incomes exceed the expenditure, we have a surplus. When the expenditure exceed the incomes, then we have a deficit. So in this case, the club recorded a surplus of 1,072,000 shillings. Then finally, we have prepared the income statement, which is also known as the balance sheet. We began by highlighting or listing down the non-current assets from the golf course, number 2, clubhouse, number 3, equipment, clubhouse equipment. We have investments. Then current assets comprise the bar inventory, the bar data, subscriptions due, prepaid insurance, the bank balance, cash balance. This is the total of the current assets. Then we have the total assets. Then lastly here we had the accumulated fund, which we calculated as a working. The accumulated fund, you recall, candidates, was not provided in the question. We had to check the information provided. We listed all the assets, then deducted all liabilities to arrive at the surplus, the accumulated fund. So these are the total assets, and here we have the liabilities. the difference between the assets and liabilities gave us the accumulated fund at the beginning of the accounting period, which appeared in the income statement here. That is the accumulated fund. We add the surplus from the income and expenditure account. This is the surplus which we added to the accumulated fund. Then we put down the liabilities, starting with the creditors, the subscriptions prepayment, then the life membership fund, and the total assets equal total accumulated fund and liabilities of Savannah Golf Club. Thank you for attending the lesson. I urge you to continue revising. There are many questions from the past papers that have tested this topic. Make sure you attempt all of them before sitting for exams. If you have any questions regarding the preparation of financial statements of such organizations, please feel free to ask your questions and all your questions will be answered. Thank you. God bless you. Bye-bye.